S&P 500 analysis, Friday, weekly expiration 2/22/2013, time 1:19 p.m. Pacific Standard Time. Chart daily S&P 500. What are we looking for, MMT? Where we call the top up here on that reversal. It's a 2-day reversal. We got down toward the lows here, and the lows were, we mapped it all out. That was 1497.29 on yesterday's double day reversal. These were the two biggest reversal days of the calendar year so far in 2013. One of the things that I want to point out is that we had undercut the 10 and the 20-day simple moving average. We were overbought and we were due for a pullback, and we have that pullback. There's going to be a lot of things that are going to happen now that this weekly expiration is out of the way. One thing that I will point out, the S&P 1510 put yesterday got up to the highs and was around $27. They were Thursday's close to $24. Their major prints were $17. This is a late print at $15.50. So they've had a big reversal based on the S&P. When the S&P had its daily counter reversal trend, the bull is very strong, and bulls always come back up off of the bottom in their first pass on daily reversals. There's a double reversal here in February. And we're going to have the debt ceiling to talk about. We're going to have lots of things that could possibly come out of Europe. Most people, the sentiment has changed. It always does when you're up at the highs. And this was where people were selling. This is a counter trend. 10-day simple moving average. And they close it above on the daily right here with its trend up above the 20-day simple moving average, which is 511.4, and our close was 515.60, up 13 handles. Now when you do the math up here where the high reversal was from an overbought bull, and remember, we're talking about bulls that have to have corrections and are healthy. So these highs over here were 1530. We went down to 1497. Let's just call it an even number. So that is 33 handle, 33 points in reversal in 2 days, which is the biggest daily reversal we had. Over here, these narrow range reversals was still where the bull was consolidating. And every time you did have a reversal, you came right back up here in this 3-day period. And then we finally are making a double day reversal 2 days in a row. But look at the length of the reversals. Now, bull runs do have reversals. So, but they always will come back up and fight that original reversal. This is a counter trend. This is an update to the 2-day selling in this 3-day period. And it looks just like this. And it's quite common on any index. This is a reversal from these 2 days of selling. We're going to look to see where the wall of resistances hold and what kind of volatility will come out over the weekend. 1514, it's above this area where this low was right here. And we close at 1550.60, so we kind of slightly close above it. But we do know for a fact that there's going to be resistances at 519 and 522 above, and so forth. The 10-day simple moving average that remains MMTs for the people that were in the reversal, that is 517.67. And the 20-day is 511.47, so it's above the 20-day. It has to close back below it, and what we look for is what that headline volatility will be over the weekend. This is the update on the S&P and the weekly expiration period for 2/22. February 22nd has played its course. The Dow closed at 14,000. That was a counter trend right here. You can see it. And he's come right back up above the 10 and the 20 both, and he bounces off the 50 simple day moving average. That's what it looks like on the Dow. You can see the top reversal double day up here, and you can see the counter trend in a bull top right here. Right here. This is the calendar yearly bull top on the Dow. There's only 30 stocks in the Dow. Nasdaq Composite, on the other hand, it too had a big double daily reversal, which was the bigger one out of all of the indexes here. Look at here. And it came down and it hits that 50-day simple moving average. And notice that the up days start with the gap, but from the gap to here, that it's done on extremely low volume. These were the two biggest, highest volume selling days of the year out of the whole bull cycle with the bull pullback. Now, having said that, NASDAQ 100 had the biggest two-day drop. All the indexes got clear down here to the 100-day, and the 50-day hits it. They pop it back up here. But this is what the reversal looks like on the NASDAQ 100. And we'll conclude it where we started with the S&P 500 and what this top looks like again. And it's very clear as to what it looks like and how bull tops have counter trends back to the upside, but the reversal nonetheless is here. And so this big red bar is when the S&P comes up here, is where it's going to have that wall of resistance. So there's lots of headline volatility that could gap down and break and go lower on the S&P. And we still have not had a complete pullback yet in the bull cycle. So the S&P needs to pull back down here and start testing some major moving averages. So we do know that the 50-day moving average is at 1475. We know that. There's other moving averages eventually over time that would make a very good pullback. The 100-day moving average is at 1446 on the S&P. That's way down below here. But listen, every bull rally index like the S&P is people been buying equities in the calendar year, and they started to sell some of them. That's what this was about here, these two-day reversal. I'm concluding the indexes, the weekly expiration, 222 of February, and the support and the resistance levels on this S&P 500. I'm going to conclude once again that they bought 13,000 contracts, which was a lot more volume than they normally trade on this particular one. A lot for the strike price. And we can see that the 1510s are 316 of 2013 on the S&P 500 puts. When the S&P goes down, the puts go up in value. When they go up on days like today to hit these resistance levels, they lose their value, and we look at buying the lower end of the S&P 500. We can clearly see the big money was buying 200 contracts here at $17 here. And up above here, they were buying a lot of contracts in these price ranges of $17.50. We can see 96 contracts. This is fairly decent money here. And then they came back and bought 147 at $17, so 98. But look at the $18 buy purchases here. Those are bigger money. And then toward the end of the, going into the close, they came in and bought $17, and this was big volume right here. So you would take, just round it up, 200 times. So you go 200 times $17, and that's their exposure on the 1510 put that they've been accumulating for the last 2 weeks.